Bitcoin started with the publication of a white paper titled Bitcoin, a peer-to-peer electronic cash system in October 2008. This paper was authored by an individual or group using the pseudonym Satoshi Nakamoto. The white paper proposed a method of using a peer-to-peer network to create a system of electronic transactions without relying on trust. This was achieved by using a decentralized ledger known as the blockchain, where transactions are verified by network nodes through cryptography and recorded in a publicly distributed ledger. The first Bitcoin software was released in January 2009, and Nakamoto mined the first block of Bitcoins, known as the Genesis block, which had a reward of 50 Bitcoins. The first transaction also took place in January 2009 between Nakamoto and an early adopter named Hal Finney. Bitcoin's creation came as a response to the 2008 financial crisis, and it offered a new way of thinking about money and financial transactions, independent of central authorities like governments or banks. Nakamoto continued to work on the Bitcoin project with other developers until 2010, after which they stepped back and left the project in the hands of the open source community. As Bitcoin began to grow after its inception, it attracted a diverse group of participants, including developers, libertarians, and those interested in using it for transactions that could be conducted away from the prying eyes of governmental oversight. The initial community around Bitcoin was driven by a mix of ideological and practical reasons, seeing it as a tool for financial freedom and privacy. Throughout its early years, Bitcoin began to gain traction not just among technologists, but also in broader circles as it presented a decentralized alternative to traditional fiat currencies. The appeal was particularly strong in regions experiencing economic instability, where Bitcoin and other cryptocurrencies offered a more stable store of value compared to volatile local currencies. The relationship between Bitcoin and the Silk Road is a significant chapter in the cryptocurrency's history, highlighting both the potential for digital privacy and the complexities of unregulated digital currencies. The Silk Road was an online black market primarily known for selling illegal drugs. Launched in February 2011 by Ross Ulbricht under the pseudonym Dread Pirate Roberts, it operated as a Tor hidden service, allowing users to browse it anonymously and securely without potential traffic monitoring. The platform was designed to use Bitcoin exclusively for transactions. The choice of Bitcoin was due to its pseudo-anonymous nature, which made transactions difficult to trace back to individuals. The blockchain technology behind Bitcoin allowed for a public ledger of transactions, which was important for transparency within the marketplace, ensuring that transactions were completed without need for a central authority. However, because Bitcoin addresses do not have to be registered with personally identifiable information, it provided a level of anonymity for users. The association of Bitcoin with the Silk Road had profound implications. While it demonstrated a practical use case for cryptocurrencies beyond speculative investment, it also cast a shadow over Bitcoin's image. For many people and regulators, Bitcoin became synonymous with illegal activities. This perception was fueled by media reports focusing on the use of Bitcoin in transactions for drugs and other illegal goods and services. The relationship between Bitcoin and Silk Road drew significant attention from law enforcement. The FBI shut down Silk Road in October 2013, and Ross Ulbricht was arrested. This event was pivotal as it led to a public auction of the seized Bitcoins, which were then worth millions of dollars. The closure of Silk Road was a clear signal that law enforcement agencies could track and prosecute illegal activities conducted using Bitcoin, despite its pseudo-anonymous nature. The shutdown of Silk Road had immediate short-term impacts on Bitcoin's market value, but the long-term effects were more nuanced. While it did bring attention to the potential for cryptocurrencies to be used for illegal activities, it also spurred significant improvements in the regulatory framework and monitoring of Bitcoin transactions. Over time, this helped to legitimize Bitcoin as a financial tool rather than just an untraceable currency for criminal enterprise. The Silk Road case highlighted the need for more sophisticated tools for analyzing Bitcoin transactions, leading to the development of blockchain analysis analysis technologies that could track the flow of funds on the network. This technology has become a standard tool for law enforcement, regulatory bodies, and even private companies seeking to comply with anti-money laundering (AML) regulations. Overall, while Silk Road cast initial aspersions on Bitcoin, it also catalyzed important discussions and developments around the cryptocurrency's regulation and technological evolution, contributing to its maturation and wider acceptance in the financial world. Bitcoin's price has been subject to significant volatility since its inception. The increasing media attention has often led to price surges, followed by sharp declines. Early instances of this pattern brought Bitcoin to the attention of the general public, leading to wider adoption and increased market entry. As Bitcoin became more popular, it also faced increasing scrutiny from regulators worldwide. Different countries have taken various approaches to Bitcoin, ranging from strict regulation and outright bans to more welcoming and regulatory frameworks designed to encourage innovation while preventing criminal use. Over the years, the development of Bitcoin infrastructure has significantly matured with the creation of more secure wallet services, more robust exchange platforms, and various other financial services, making Bitcoin more accessible and usable for the general public. Bitcoin has also seen significant technological advancements, including the implementation of the Segregated Witness (SegWit) protocol upgrade in 2017, which helped to increase block capacity and improve scalability. Other proposals and improvements continue to be discussed and developed within the Bitcoin community to address issues such as scalability, privacy, and transaction speed. Over time, Bitcoin began attracting attention from larger businesses and payment systems. Companies like Overstock.com began accepting Bitcoin as payment as early as 2014. In addition, payment processors like PayPal and Square integrated Bitcoin into their platforms, significantly enhancing its legitimacy and accessibility to mainstream consumers. One of the most significant events in Bitcoin's history was the debate over its scaling issues. As more transactions began to clog the network, the community debated ways to increase the transaction capacity of the blockchain. This debate led to a hard fork in 2017, creating Bitcoin Cash, which increased the block size to allow more transactions per block. The term Bitcoin fork generally refers to changes in the protocol of the Bitcoin network that results in two diverging paths from the original software. Forks can be categorized into two types: soft forks and hard forks. Both are ways of updating the software that governs the Bitcoin blockchain, but differ significantly in how they affect compatibility between the new and old rules. A soft fork is a change to the software protocol where only previously valid blocks, transactions are made invalid. Since old nodes, those that do not upgrade to the new software, will still recognize and validate blocks created by the new nodes. Those that have upgraded, soft forks are backward compatible. This type of fork requires only a majority of the miners upgrading to enforce the new rules. An example of a soft fork was the introduction of Segregated Witness in 2017. SegWit was designed to help increase the block size limit by splitting the transaction data into two segments, one for essential transaction data and the other for signature data, effectively freeing up space to include more transactions in each block without changing the size limit. A hard fork is a radical change to the network's protocol that makes previously invalid blocks, transactions valid, or vice versa. This type of fork requires all nodes or users to upgrade to the latest version of the protocol software. Hard forks are not backward compatible, meaning that nodes not upgraded to the new protocol will not recognize the new blocks as valid. Hard forks can create a permanent divergence from the previous version of the blockchain, adding a new coin to the ecosystem. The most notable Bitcoin hard fork occurred on August 1st, 2017, leading to the creation of Bitcoin Cash, BCH. The main contentious issue that led to the Bitcoin Cash hard fork was the method of scaling the network to accommodate more transactions. While one group within the community supported the soft fork approach of SegWit, another group pushed for increasing the block size limit from 1 megabyte to 8 megabytes, which they believed would allow more transactions per block at lower fees. Forks in Bitcoin typically stem from debates within the community about how best to scale the network, how to improve Bitcoin's technology, or differing goals and visions for what Bitcoin should become. They reflect the decentralized nature of Bitcoin, where changes to the system require consensus, but achieving that consensus can be difficult. When a significant portion of the community decides to follow a new path after disagreements, a fork occurs. Other forks, like Bitcoin Gold and others, also occurred, each proposing different technical solutions to various perceived issues with Bitcoin. The entry of institutional investors marked a significant milestone for Bitcoin. Futures contracts for Bitcoin started trading on the Chicago Board Options Exchange (CBOE) and the Chicago Mercantile Exchange (CME) in December 2017. This not only brought Bitcoin to the attention of institutional investors, but also helped stabilize its price through more regulated investment options. Over time, more financial products linked to Bitcoin, such as exchange-traded funds (ETFs), have been proposed, though not all have been approved by regulators. As Bitcoin's financial importance grew, it increasingly influenced monetary policy discussions. Some countries, like El Salvador, have even adopted Bitcoin as legal tender, indicating a significant shift in how cryptocurrencies can be perceived at the governmental level. Conversely, other countries have imposed strict regulations or outright bans, citing concerns over financial stability, criminal use, and investor protection. Bitcoin's underlying technology, blockchain, sparked a wave of innovation beyond cryptocurrencies. It has been explored for applications ranging from supply chain management to secure voting systems. However, challenges remain, including environmental concerns over the energy consumption required by Bitcoin mining, which relies heavily on electricity-intensive proof-of-work algorithms. Bitcoin has experienced several market cycles, characterized by rapid price increases followed by steep declines. Each cycle attracts new interest and investment in the cryptocurrency, expanding its user base and investment profile. These cycles often correlate with broader economic factors and shifts in investment sentiment towards traditional and digital assets. These elements highlight Bitcoin's complex nature as a technological innovation, a financial asset, and a social phenomenon. Its development reflects broader themes in digital privacy, financial autonomy, and the evolving regulatory landscape. As Bitcoin matures, it continues to challenge traditional financial systems and provoke discussions about the future of money and digital identity. Please like and subscribe if you enjoyed the video.